All right, well, welcome back, everybody. Dean Cottrill here with T360. We're excited to be diving back into our summer series. This is our weekly series to highlight some key area and helping you run your brokerage or your team more effectively, more efficiently, and more profitably. Lisa, my partner in crime, how are you, Lisa?
I'm awesome. It's a beautiful day in Colorado.
I don't know where I came with that line, the partner in crime. So with that, we are so happy to have Ernie Whitehouse back with us. Ernie is part of our T3 team, consulting team in our brokerage and team division. Such a rich background in 40 plus years in the industry. He's taken 3 different organizations, 2 of which independent. One was a franchise, built those up and sold them. One, I remember the last one Ernie did went up to over 500 agents, was a big operation and was doing some really big numbers, was in the Mega 1000. If we had a Mega 1000 at the time, Ernie, you would have been up there, right? Up in there under 200 in the 150 range, if I remember correctly. So did some phenomenal work there. Also really was a strength in ancillary services, mortgage, title, warranty, insurance, company lead gen. So he's a great resource for us and our clients. Ernie, so good to see you. Welcome back.
Dean, thank you. It's a pleasure to be here.
Thank
Awesome.
you. So let me kick off. First, I want to mention that the 2021 Swanepoel Trends Report did an entire chapter on ancillary income. So if you're a subscriber to our digital trends report, you can read that. It's also known as affiliated services. So more and more brokerages are establishing ancillary services to increase their profitability. Mortgage would be the big, that's probably the big bucket where they make the most money, but also title and escrow. And then there's insurance and moving and home warranty and different other opportunities for ancillary income. So Ernie's had ancillary incomes with his brokerages, and I'd love for you to explain to us the different structures for affiliated businesses.
Thank you, Lisa. There are 3 primary structures that you're going to look at, and they are very much related to size of operation. Most companies will start with what we call the MSA. So number 1 is the MSA, which stands for Marketing Services Agreement. And that's where a company enters into a marketing services agreement with a mortgage provider or a title company or an insurance company. And there is either shared space, so there's income being paid, or there's shared marketing expenses. So, the company that they're working with is paying for the marketing on the website, or however the marketing expense gets, outlined. And those are typically for operations that are under 200 buy sides a year. So on that smaller end, 200 buy sides and down, isn't the MSA is sort of the best fit. The next fit that we say for legal structures is the joint venture. And the joint venture is a business that gets formed by not only the brokerage or the owner of the brokerage, and also either a title company, a mortgage company. So there's a new entity that's formed, and it's a joint venture. The joint venture operations typically work for companies, brokerages that have 200 to 500 buy sides a year. So if you have 200 to 500 buy sides a year, that joint venture will work pretty well. But you need that kind of volume to make a joint venture profitable and make it work for both partners. The next structure to look at when you're looking at ancillary services or affiliated income is the next structure is wholly owned. So a brokerage owner sets up a mortgage company, sets up a title company, they set up an insurance company, and they own it 100%. Now, they may partner with another individual in a minority basis that brings the expertise in for mortgage or title, but it's a wholly owned company by that, brokerage owner. Those operations, my experience has seen that you really need 500 buy-side transactions and up in order to make that profitable and really work financially for the brokerage owner. Now, it's not cast in stone at 500. It's just that's a general parameter. Can you do it less than that? Yes, you can. If higher, the better. It obviously scales very nicely from a profitability standpoint. But those are the three primary structures: marketing service agreement, joint venture, and then wholly owned.
That's
And
awesome.
I've done all three of them in my career.
Yeah. Yeah. And in the framework, and I think also given the buy side numbers you just provided, Ernie, really gives an opportunity for who's watching this to really understand where they fit in that. What would you say, well, thinking in, because one of the things that we've discussed multiple times when we discuss with our clients all the time is profitability. What would you say to someone who's listening to this, who's a brokerage or a team out there, and they're thinking about, and they're looking at their P&L, and they're struggling maybe a little bit and creating some additional profit? What would you say to them about moving into this direction as doing something with ancillary services?
Well, there's a couple of pieces there, Dean, and we could talk forever about it. The first is customer service. When you start providing, more pieces to the pie in a real estate transaction and the ability to control that, your customer service and how you're delivering your customer service can really increase. That's a key benefit to making the transaction more efficient, more profitable for everyone, including the clients, for sure. But from a profitability standpoint, I would also talk about the key concept of capture rate.
I was going to ask that. Yeah, what's a reasonable average capture rate for mortgage, as an example?
I've seen MSAs under 5%. I've seen MSAs as high as 25 or 30%. Company owned, where you own the operation itself, I've seen as high as 65, 70% capture rate.
Wow.
It can happen, but in order to make that happen, you have to outperform the marketplace in service and in rate. And as you grow from 10 or 15% to 25, 30, 40, 45%, you're going to have performance guarantees out there, and you're going to have to match or do better than the entire marketplace in terms of rate, service, delivery. Primarily it comes back to doing a guarantee of service, and you have to be willing to guarantee that service.
Interesting. Our last trends report, the 2023 trends report, had a chapter on brokerage profitability and Burke Home Services of America being the most profitable. And a big part of their profitability was this. Their target is 1 in 4, capturing 1 in 4 of the buyers for mortgage. But their goal is 30% capture rate on mortgage. What about other capture rates on other businesses, Ernie?
Well, once you move into mortgage, okay, then you have the ability to sort of control where title and title insurance is placed as that origination from that mortgage process. So title comes in, so those should be matched with each other one-on-one. For wherever you are in mortgage, you should be the same in title. Insurance, the same thing. It's a pretty wide open market there, but you have to outperform on customer service and on rate for insurance. So there's no reason why those same type of capture rates can't go. I have seen it as high as 65 and 70%. Wow. People are just blown away. But it's because the brokerage owner operation has really focused on the one-stop shop concept and making things smooth and easy. It's easier for the client, it's easier for the agent, and everything is just clicking on all cylinders. And so that kind of customer service is critical in order to increase your capture rate.
So you answered my next question, which was how do you get agents to buy in, right? I guess that's really how, right? If you're providing the service and
if you're outperforming their providers and you're doing better than their providers, they're going to eventually migrate to you. In addition to that, by doing transactions in-house with in-house operations, we all know it's easy to do a transaction when everything is working. It's when they aren't working exactly according to plan, and then things start blowing up and little bombs start going off. You're a whole lot better off to be working that internally with internal management to get rid of those problems really quick, rather than sitting on a 1-800 line, +3, +4, +5. You can walk down the hall to the
Yeah.
mortgage or the title company, talk to them face to face and get it resolved right there. That makes efficiency much more productive, and agents will see that and they will want to have that type of service delivery.
So there's some new interesting trends, and in the last few years where some of the largest brokerage companies are putting together JVs outside of their brokerage and brand, right? Like a statewide JV with multiple brands and companies. So that's one interesting trend that I've seen happening if the company's not large enough or they don't want to do it on their own. And then the other trend that I thought was interesting is that I guess, there's a couple title companies out there that will do a JV with an agent, right? So we're going to remain neutral on this, but I think it's just an interesting topic for brokerages to be aware that, they might have a title company and suddenly they might have a team that's doing their own JV, right? And is that something you want to write into your policies and procedures, your independent contractor agreement? It's just a new trend in our business.
And it speaks very loudly to legal liability.
Mhm.
And anyone that is, going down those paths, they need to carefully understand what their E&O, what their professional liability, what their general liability policies cover. And if agents are doing that, then they need to understand what they're exposing themselves to for potential liability.
Yeah.
So just to wrap up, obviously it's better serve your customers. If you add ancillary income, you're going to collect more revenue, you're going to diversify your income and build a more resilient business long-term. So, and if you're interested in starting an ancillary income business, we'd be happy to help you.
Yeah, and on top of that, just a reminder, we also do an annual business audit where we do a nice dissection of your business and an evaluation and assessment and give you benchmarks and also discuss best practices. So that's something we encourage on an annual basis. We dive into some of these key areas, looking at your revenue. And we also have a fellows program. It's our leadership program that starts twice a year. And that's a deep dive in supporting you over the course of 12 months. And we dive into some key areas on running a brokerage or team more effectively and more efficiently. So if you'd like to know more about those or anything else, or like reaching out to us about understanding the affiliated and ancillary services, please do. Look forward to talking to you. Thanks so much,
Ernie.
Thanks, Ernie.
Take care.
All right, take care. Bye-bye.